Well, earnings season has begun, and we are bringing you the next in our special series, Quarter Se Quarter Tak. The spotlight is on the consumer durables space this time around. Praveen Sahay, Vice President, Institutional Research at Prabhudas Lilladher, is with us to talk about his expectations from the companies in the third quarter. Praveen, good to have you on. So, let's start with the broad, big picture, expectation, given that there's a lot of chatter around a slowdown in urban discretionary demand as well. And traditionally, this is not the hottest period, right, for air conditioners, coolers, etc. This is seasonally not the strongest period. What are your expectations?
Yeah, hi, Surabhi. Good morning, everyone. So for a consumer durable space, we are expecting a similar kind of a quarter like of a last quarter, Q2. Like a last quarter, around a 17% of growth for a durable space in our coverage we had seen. A similar kind of a number this quarter as well. Again, that's driven by the cable companies. So wire and cable companies continue to deliver a strong growth and driven by the cable business, not from the wire. Similarly, in the FMEG space, we are expecting some subdued quarter, as you had already mentioned, Surabhi, that the season is not the season for especially for the cooling product, but also festival was gone by. So if I look at our channel check, festival to festival, YOY growth, that's also quite subdued. So secondly, on the RAC side also, we are expecting the similar kind of a growth as of last quarter, Q2, to continue. Even there is a channel inventory space. We are expecting there is some improvement there as well. That's driving the primary sales for the RAC companies. So I can summarize that this third quarter is similar to that of a last quarter, Q2, driven by the cable and the RAC companies to continue, and the FMEG segment continue to be soft.
So Praveen, put a number to that. Praveen, just put a number to that in terms of, either top line growth or just let's talk volumes.
Yeah.
For FMCG, sure. What is the growth, and also festive, festive over festive? What was the uptick, since the sentiment was fairly muted? What was the festive over festive growth? And also give us the total top line growth that you're going with for your coverage universe.
Yeah, sure. So for our coverage companies, we are expecting a growth of around 13% in the top line, and as well as there is some 80 to 100 basis point improvement in the margin front, and in the profitability also we are expecting. So the similar kind of a growth to come in. So some around 30% odd growth in the profitability, and that's largely because of last year. Your same quarter muted numbers, especially from the Voltas. So adjusting for that, definitely that's a 20 to 24% of a growth we are expecting in the bottom line. Season to season for FMEG, we are expecting quite a flat, and for FMEG as a portfolio for entire coverage, we are expecting around 9% of a growth. Also, we have to consider that the last year the Crompton has given a very strong number in the ECD portfolio of 18.5% of a growth. So that's also to factor in. While season to season, what our channel check has indicated, that's not so great season to season for FMEG growth has been quite flat, especially on the offline segment. So yeah.
Right. Praveen, one thing I've heard from a couple of people now on the fund manager side is towards the end of this year, you'll have a lot of real estate possessions which will happen across companies. And at that point, you may actually start to see demand for, especially on the FMEG side, which perhaps may start to pick up a little bit. Is that have you looked at that? Is that a factor at all?
Yeah. So I'll, related to the real estate, I'll talk on this wire. So wire, which has been quite muted for this quarter as well, that's expected to improve in the Q4 onwards with the real estate deliveries. That is the one. And also in the FMEG space, from the last couple of a quarter, fan segment is not performing. especially the Havels or Crompton. The fan division is quite a flat. That also expected to come back, but definitely that's also there is a factor of a seasonality in that as well. But as you ask, related to the real estate, fourth quarter is expected to come with a higher demand to come in. And also to highlight here, just to highlight here that the copper, which has been quite flat in the Q3 as well as now, so that is also drive the uptick in the wire demand for a Q4.
So, since you mentioned copper prices, let me come back to margins, because you did say that there will be some margin expansion, at least year on year. If you could revisit that number, just break down margins for wire and cable separately, what you expect there, and for FMEG separately, what is the margin performance this year and what's the trajectory going ahead on margins for both of these segments?
Yeah, definitely. So wire and cable segment expected to see an improvement on the YOY side, on the even to some extent the sequential numbers improvement in the margin, because copper and aluminum prices, if I look at on average basis, 1% increase in the copper prices sequentially, and around 8 to 9% for aluminum, and that was a quite stable or in the upward trend. So we are expecting sequential improvement of nearly 100 basis points for a wire and cable companies. Whereas on the FMEG segment, if I look at the FMEG segment, especially in the ECD portfolio, that is a sequential improvement we are seeing, but a YOY is still that is quite down on the margin front. So say example of a ECD portfolio of a Havels, we are expecting still YOY around 200 basis point lower number, and Crompton is also in a similar like a 50 basis points a lower number in the ECD portfolio. So because the demand is not so great, and especially in the fan, that also led to the contraction in the margin for the FMEG portfolio.
All right, Praveen, we'll leave it there. Thank you very much for joining us and running us through your expectations for these spaces in the third quarter. A bit of commentary here as well.